Imagine walking into a bank, handing them $10,000 of your hard-earned money, and the bank manager looks you straight in the eye and says, "Thank you for your loyalty. We're going to reward you with exactly $1.30 at the end of the entire year." You'd think it's a joke, right? You'd think it's a scam. But here is the terrifying reality. If your money is sitting in a traditional savings account at Chase, Bank of America, or Wells Fargo right now, that is exactly what is happening to you. While inflation is eating your grocery budget alive, your bank is using your money to make billions and throwing you the absolute crumbs. But wealthy Americans? They aren't playing this rigged game. They aren't keeping their cash where the banks tell them to. There is a hidden financial migration happening right now in America. And if you don't move your money soon, you're literally losing thousands of dollars every single year. To understand how this trap works, let's look at two neighbors living right next door to each other in Columbus, Ohio. Let's call them Mark and David. Both Mark and David are 35 years old. Both worked incredibly hard over the last few years, saved up, and managed to put exactly $20,000 into an emergency fund. Mark is a loyal guy. He's had the same bank account with a major national bank since he was in college. He feels safe seeing that digital balance on his phone app. He thinks, "My money is in a savings account, so it's growing." David, on the other hand, spent just 15 minutes doing some research. He decided to move his $20,000 into a high-yield savings account, or a HYSA. Fast forward 1 year. Mark opens his year-end bank statement. He expects a nice little bonus for keeping 20 grand in the vault. He scrolls down to the interest earned section. His total reward? A grand total of $2. $2. That's not even enough to buy a cup of coffee at Dunkin' anymore, because his big bank is paying him a microscopic interest rate of 0.01%. The same day David opens his app, his balance didn't stay at $20,000. It is now $21,000. He made a clean, effortless $1,000 in pure interest. He didn't risk a single dollar in the stock market. He didn't buy crypto. His money was just as safe and FDIC insured as Mark's. But he made 500 times more money than his neighbor just by clicking a few buttons. Mark didn't just lose out on $1,000. When you factor in the rising cost of rent, gas, and groceries, Mark's money actually shrank in purchasing power. His bank successfully pickpocketed him without him even realizing it. Why do banks do this? Why do they hide the good rates from you? It reminds me of an old story about a village that had a massive, ancient well in the center of town. The villagers brought their pure water to this well every day for safekeeping. The village elder told everyone, "Keep your water here. It is safe from thieves." The villagers trusted him. But what the villagers didn't see was that the elder was taking their water, filtering it, selling it to neighboring cities for gold, and getting incredibly wealthy. When a villager came back thirsty and asked for a drink, the elder would hand them a single, tiny drop of water on a spoon and say, "Be grateful. Your water is safe." The traditional banks are that village elder. When you deposit your paycheck into a big bank, they don't put your cash in a physical vault with your name on it. They immediately take your money and lend it out to other people for mortgages, car loans, and credit cards. They charge those people 7%, 10%, or even 24% interest. Right now, because of the Federal Reserve's interest rate policies, banks are making massive returns on your money. They're drinking from a golden well. But when it's time to pay you your share, they hand you a single drop on a spoon, 0.01%, and hope you don't ask any questions. The concept and the data, the 5% APY reality. This is where the 5% APY reality comes in. Right now, we are living through a unique moment in American financial history. For nearly a decade after the 2008 crash, interest rates were close to zero everywhere. It didn't matter where you kept your cash. Nobody was making money on savings. But things changed drastically. To fight inflation, the government raised interest rates. Suddenly, the value of cash went up. Online first banks like Ally, Marcus by Goldman Sachs, SoFi, or Capital One started offering high-yield savings accounts paying 4% to over 5% annual percentage yield, APY. Let's look at the actual numbers, because the math doesn't lie. The average American has about $8,000 in savings. If you keep that $8,000 in a traditional bank at 0.01%, you earn 80 cents a year. If you move that same $8,000 to a HYSA paying 5%, you earn $400 a year. If you have a larger emergency fund, say $50,000 for a family safety net or a down payment on a house, traditional bank earns you $5 a year. High-yield account earns you $2,500 a year. That is a mortgage payment. That is a vacation to Florida. That is a year of free groceries. And you're handing it back to the bank as a free donation just because of brand loyalty. Why banks hide this from you? You might ask, if this is so simple, why isn't everyone doing it? Why hasn't my bank offered me a 5% rate? Because silence is profitable. Big banks have a massive advantage: human laziness and fear. They know that switching banks feels like a hassle. They know you've had your direct deposit set up for years. They spend billions of dollars on marketing, putting their names on football stadiums, and placing a branch on every street corner in America, so you feel a false sense of security. They don't want you to know that online banks can offer 5% because they don't have to pay for thousands of physical buildings, electricity bills, and branch managers. Online banks pass those savings directly to you. The big banks are betting that you will stay asleep. They are banking on your silence. How to break free? Breaking out of this trap takes less time than ordering a pizza. Where smart Americans actually putting their money right now? They are keeping their everyday checking accounts for paying bills at their local bank. But their real savings, their emergency funds, their tax money, their future house funds, are immediately transferred to an FDIC-insured high-yield savings account. The key word there is FDIC-insured. That means even if the online bank goes completely under, the United States government legally guarantees your money up to $250,000. It is exactly as safe as the biggest bank on Wall Street. Stop giving away free loans to institutions that charge you $15 a month just for holding your money. Stop letting your hard work build someone else's tower. Take a look at your bank account today. Check that interest rate. If it doesn't start with a 4 or a 5, you aren't saving money. You're giving it away. It's time to move your money to where it actually respects your hustle.